So I'm going to start off by introducing myself. My name is Joe Rossi, and I am the chair of the Marshfield Citizens Coastal Coalition. This is our mission statement. We allow the citizens of Marshfield to have an active voice in coastal issues in town and regionally, along with keeping Marshfield citizens informed on coastal issues that affect them. Needless to say, this is a coastal issue that affects everyone. So tonight, there's going to be a lot of information given. It's an hour-long presentation with a half hour of questions at the end. We are asking everyone to please, there's going to be a lot of questions as we move along in the presentation. Please keep your questions to the end. On the back of the handouts that we gave out, which starts with a page of acronyms, says acronym sheet. On the very last page, on the back, there is a notes page. If you have a question during the presentation, please take a note of it on the back of the page and bring it up to the microphone we have in the middle of the room after the presentation, and we'll answer your question. If you can't stay for the whole presentation and you still have a question that hasn't been answered, please leave that notes or a note in the back of the room at our sign-in table, and we'll answer that either through our website or through an email. What I'm going to do now is I want to first acknowledge a couple of people that we have in the room tonight. We do have Representative Jim Cantwell in the room tonight, and we also have a representative from Senator Hedlund's office in the room tonight as well. If you gentlemen could just raise your hands up in the front here. Thank you for coming. There's other individuals in the room, and we'll acknowledge them towards the end of the presentation as they speak. I want to start off, we're going to start off with a member of our executive board of the coalition. Oh, let me just start off by saying a lot of people have reached out to us and asked, how can we join the Marshfield Citizens Coastal Coalition? We are not a town government organization. We are a citizens group. Everybody has just as much input into this group as anyone else does, including our executive board. The executive board exists in order to organize outreaches such as the one that you are at tonight. So I want to start off by saying if you do want to be a member of the executive board, if you want to help in any way, if you want to receive our newsletter, please, we've got sign-up sheets in the back. Our email will be all over the papers that you have and the papers in the back and all around the room. Feel free to email us, leave a note, and we'll be able to contact you that way. So on to the presentation. I want to start off, this presentation is, and the bottom line is we're here to help you. So what is going on? There are two separate things happening at the same time. Biggert-Waters and new FEMA flood maps. So first things first, understand the acronyms. Please reference the acronym sheet. There are so many acronyms used in these programs, whether it be the Biggert-Waters Act or the new FEMA flood maps, that we've produced an acronym sheet that is attached. It's the very first sheet in your packet. It is double-sided. All the sheets in the packet are. The first sheet in the packet, the acronym sheet, is going to assist you as we move along. We explain the acronyms as many times as we can during the presentation, but many times they do repeat themselves. Here are the ones in your packet that we're going to reference tonight. NFIP, which is the National Flood Insurance Program. FEMA, Federal Emergency Management Agency. And all of these are in the packet, and the descriptions are in the packet as well. FERM, Flood Insurance Rate Map. CRS, Community Rating System. LOMA, Letter of Map Amendment. SFHA, Special Flood Hazard Area. PRP, Preferred Rate Policy. The third, I believe it's the third handout, it's the last page, the front of the last page on the handout is on PRPs. We'll be referencing that a couple times during the night. BFE, Base Flood Elevation. So here's the explanation on flood zones really quickly before we get into our presentation. What are they? A lot of you have heard of A, and X zones as referenced on the FIRMS. There's our first acronym of the night, FIRM, Flood Insurance Rate Map. There are variations of B and A zones, such as VE and AE, and many of you have asked me what each one means, but for the purpose of this part of the presentation, we will use the basic B, A, and X zone. So for part one, I'd like to bring up a member of my committee, one of the, I would say, all-time experts in the area on flood insurance and flood insurance rate maps. She sat on the Coastal Advisory Committee back in the 90s in Marshfield and actually has testified in front of Congress on a lot of the stuff that we'll talk about later tonight. I'd like to introduce Doris Crary.
Thank you, Joe. I'm going to bring this down a little bit. I'm a little short. What I wanted to do is just start off by saying I am a true supporter of this program, and I had my first policy in 1973. So I have had flood insurance for 40 years. Grateful to have it when the blizzard of 78 hit and did cause damage in my home. Fixed the problem after that and have never seen waters again. But I still have flood insurance on that home. So what I want to talk about now is the Biggert-Waters Act. And this act happened, none of us were aware it was even going on. It's in effect for the next 5 years. And what it means is, in the sense of the flood insurance program, when it was designed in 1968, the number one thing about that program was that it should be affordable. And the reason they wanted an affordable program was flood insurance was available, even back then, but it was actuarially based and it was unaffordable to average Americans. And they wanted, the government wanted to reduce the cost to taxpayers when people had floods. So they came up with the National Flood Insurance Program, and it has been, by the way, one of the best run programs I think the federal government ever did, and let me tell you why. Out of the premiums that we paid all during the 80s and the 70s, 80s, and 90s, we actually reimbursed the federal government for every map they ever drew on this United States for flood insurance. It is not a taxpayer subsidized program. The subsidy that you hear people talk about for flood insurance, and as we'll go through this, is a subsidy that is based upon the premiums that people pay into the program. And so this has been an extremely well-run program, and I'm sorry to see some changes, but what I'd like to do is talk, there are two things that are very important that are happening with this Biggert-Waters Act. It is the elimination of pre-firm structures. Pre-firm structures are those structures that were built before 1977 here in Marshfield. And that's a lot of us. And then the other thing that is happening is it's the elimination of grandfathering of structures. Grandfathering, for some of you, might be that you originally, when you took your flood insurance, were in maybe a C zone. It later got mapped to be a B zone. You would still be paying for your flood insurance if it's never lapsed over that period of time, which could be 40 years or more. You would be paying at the grandfathered rate. The difference today in that rate is that the rate that would be the B zone rate would probably be 10 times what somebody is paying. Just an estimate there, but could be that high. The pre-firm structures, as I said, are those that were built before 1977. And this is one of the things that this program changed. There's about 20% of the structures in the United States. However, 45% of those structures that are pre-firm are located in New England, and I would suspect in a town like Marshfield, our number could be higher than that and maybe even be 60% or more of our structures, just given the age and the kind of development we had on our coastline. So pre-firm, which may not be a big issue to a lot of the United States, is a huge issue to us. and my house is pre-firm. Now, grandfathering, that's another whole thing, and what with grandfathering is this is when, as I said, you start in one zone, it's usually a lower rate zone, and then you get remapped into a higher zone. It could be from an A to a B, it could be from a C to a B. When that happens, you still keep your old rate. And so the plan here on the flood insurance, on what they're doing, is to actually phase out grandfathering at 20% a year. And then there are some other things that will allow that to happen. But this subsidy is really important, and here again, I stress it's not a taxpayer subsidy. It is actually a subsidy that occurs by insurance policy holders, other members of the NFIP paying more, which then covers the subsidized rate. So it is not a taxpayer subsidy. It is, in the federal government's word, they call it a cross subsidy within the program. Now, these rates are going to change with Biggert-Waters. How quickly this will happen, we know what the legislation says, and I can tell you that there are already people working to maybe slow some of this down, but we do know it's going to change. Here's the other thing we want to explain to you. If you own a home that is in the special flood hazard area, which would be a B or an A zone property, you must have flood insurance if you have a federally backed mortgage. The vast majority of residential mortgages in the United States are backed by Fannie Mae, have I got it right, Fannie Mae and Freddie Mac?
Fannie
Mae, that's what I said, I think. Yeah. So anyway, Freddie Mac and Fannie Mae.
That's Fannie's husband.
But the good thing about this is you will still get a regular slip from, if it's with Rockland Trust or Situate Federal, you would still get your regular bank slip from a bank, but it's just that they are backing that mortgage. And it's not the bank that's taking the risk. Therefore, what they did in 1993, when they passed the new act, what they did then was to have it tied to mortgages and make the banks responsible. In this act, if a bank does not have a flood policy on a home that's in the special flood hazard area, they now face a $2,500 fine, I believe it is, per property. So it's a substantial amount. Now, this is what's going to happen with the pre-firm and grandfathered structures. If it's a secondary residence, so for those of you that live maybe the winter in Florida and summer up here, you're going to find that if this is not your primary residence, you will be having the increase of your grandfathering and the pre-firm will be at 25% a year, and it's already started, and the grandfathering is at 20% a year. So this is something that is going to change, and what I would say to people is you might want to consider making your home here in Marshfield, for the member of the family who has the policy, this as their primary residence, and that could help offset, and I would suggest that. The second thing is severe or repeated flooding. You may have heard the term repetitive loss. Repetitive loss refers to a property that has had 2 losses in a 10-year period of $1,000 or more. This term, severe repetitive loss, is not that definition. The definition of severe repetitive loss are properties where they have had more losses than the value of the structure or equal to the value of the structure. And severe repetitive losses are losing their grandfathering immediately. So that will be that they will be paying that additional 25% until they reach the actuarial rate. As we said before, on non-primary secondary residence, they will be also losing their grandfathering at the 25% rate, 25 for severe repetitive losses, and business, non-residential properties will also be losing at the 25% rate, the key date being October 1 of 2013. So you will receive your renewal after 2013 with this increased rate in it. That's how, when your regular flood renewal comes out, you will have a different rate than you've had in the past. And that's how you'll get notified.
For a moment. I just wanted to, I forgot to mention that all of this information that we're going over in part 1 is the second page of your packet. So to follow along a little better, this is getting, yeah, no, I'm sorry, I just realized that as we were talking. So just, there's a lot of stuff that we're talking about, and we're trying to go over it a couple times, but to go over it again as we're doing this, please, the second page also has a backside, and so we're moving along in that part of the packet right now.
Thank you, Joe. Turn my own page over and I'll keep track. As you can see, I didn't need to read it. The true risk, this is a new term. And the actual word they're using there is actuarial. As I said, when this act, the flood insurance program, was originally put in place, the word used was affordability. I haven't seen any mention of affordability in the latest Biggert-Waters Act. I've only seen the use of the word actuarial, and many, many times. And I feel that's really unfortunate, because what they're doing is they're bringing up the premium costs. So if somebody doesn't have a mortgage on a home, they just might decide, well, maybe I don't need my flood insurance, I haven't been hit lately. And I feel very bad about that, because I don't think that's good for people who live in the flood-prone areas. There are many people down in the New Jersey and New York area who did not have flood insurance, that only wished they had it. So here's the definition, and that we've gone over on repetitive loss: 2 losses or claims in 10 years over 1,000. Severe is equaling or exceeding the value of the structure, and it's usually 2 or more losses. And then this also includes substantial improvement. Let me explain the difference of what substantial improvement is. If any of you are thinking of doing some major renovations in your home, if you were to put in new kitchens, redo that whole first floor, that could maybe bring about for you what's known as substantial improvement. If that were to be done on your property, then your whole flood insurance, if it's grandfathered or it's set up as pre-firm, you could click into then having to pay the newer rates. So something to be very aware of. Maybe smaller steps are better than one huge step. If your property is substantially damaged, that means that a storm did it. Then you could, again, if it's over 50% of the value of the structure, then you will have to go into fixing the problem of the flooding, as well as doing the new program relative to your insurance. And I don't know how many of you here knew that, but that's been in effect for a long time. The good news is, in your flood insurance program, you actually have money in there that is to help you if you were to have to elevate. It's called ICC, Increased Cost of Construction, another acronym. Okay, let's see, one more time. All right, so it's the non-primary, secondary residence for people that will see the 25% increase already folding into renewals this year. Severe and repeated floodings, those that have the value of the structure, you will be seeing, again, a 25% increase, only it will be beginning October 1 as renewals go out. So if your renewal date is June of next year, you won't see that till probably June of next year. And then business and non-residential properties, also a 25% increase occurring. I can tell you what happened to me. I have more than one property in the flood. I sent in my premium, got my regular bill, sent it in, and guess what? A month later, I get a new bill for more money. So they sent it out, and I had to pay more money or lose my $250,000 coverage that I have on my property. So you will, this is happening right now. Primary residence, and what we want to talk about here is when does grandfathering absolutely disappear? The first thing is, if you sell your home and you have a grandfathered property, it used to be able to travel to the new owner. That is no more. Automatically, the new owner will have to buy your house at the full rate of flood insurance. And I know people that this means thousands and thousands of dollars. And so that's something to take into account, that, you know, when you're filling out that paperwork and they ask what you pay a year for flood insurance, it is not going to be what the new owner will pay for flood insurance if it's grandfathered. The other thing is about policy lapses. You do not want to let your policy lapse, because that automatically would take away any grandfathering, and that is a key thing. The other thing is, if you suffer severe repeated flood losses, I have to tell you, I took a $2,000 deductible on my flood insurance, and if I get $2,500 worth of damage on my house, I don't go back to them to collect the $500. I just say, you know what? Better not to have that loss on my record. And that's my point. You know, I think of it, you know, if my whole house got trashed, well, that's another story. But, you know, I would definitely recommend that keep minor things, because that $1,000 window there is typically more than, it's the deductible, they count the whole thing. So on flood, that would be a $2,500 loss, not a $500 loss. So you see what I'm doing there? And then the other thing is when a new policy is purchased, and I want to say I'm not as clear on what that exactly means. In other words, is a new policy certainly probably when you change the name. So I was going to recommend to people, if you have a home and you want to put it in a trust, it would be good to do it before any of these things take place, and that way you'd have it done and you'd be okay. But that's a name change on the policy, and that could be probably something that would change it. The other thing I wasn't sure of is if we increase the rate, like, you know, you do a big addition on your house and maybe you had a $100,000 policy, and now you say, well, gee, I really ought to up it to $200,000. That could be considered a new policy. I do not know at this moment, and I couldn't begin to say this, but if you're going to make any changes at all to your policy, have it confirmed prior to doing the change, so you know if this is going to take you out of your grandfathering or not. And have it confirmed right through the NFIP, through your flood insurance agent. Have him write that letter to them and get that answer. And now substantial improvement or repair, more than 50% of the value, as I said before, that automatically would eliminate, again, the grandfathering and put you into a new coverage. Okay, immediately, and here's the thing, we feel that you will have to pay these actuarial costs immediately upon the change, and the goal is to bring them up. What we're seeing is that they want to increase the cost of all the flood insurance premiums. And they're going after the people, unfortunately, who've been supporting and keeping the program in place all these years. And I think that that's unfortunate. I think we will have to fight this in Washington on what's affordable, but it's not something that we're going to be able to do a lot about in the next 90 days. We have to focus on the maps, and Joe's going to talk about them. But this is actually retroactive to June of 2012. So when they passed this legislation, they made it retroactive. So that if there was any, one-year notices and things of that nature, we're doing that now because of the time frame. Here's the thing, if you own your house outright and you have no mortgage and you don't plan to sell it, this is not going to affect you if you don't have flood insurance. So you're the group that is unaffected. But if you're thinking of selling your home, that new homeowner is going to have to get her mortgage somewhere, and they're going to require that person to have flood insurance. Okay. So what can you do? Well, the NFIP is recommending that you buy a preferred risk policy, which is flood insurance now. And let me talk about what the preferred risk program is. They put this in place, the NFIP did, more than 10 years ago. And what they did was to say that approximately 25 to 30% of the losses occurred outside the special flood hazard area. Therefore, if those people had flood insurance, it would help them when it happened. The risk was less likely in that area, so therefore they made a program. And you've all maybe seen it running on TV. It's that $129 premium. In order to have a preferred risk policy, you must have not been put in the special flood hazard area. So if you are a person who has an existing policy that is in the V zone or the A zone, you can't get a preferred risk policy. This would be only for those of you that are here tonight that will find out for the first time that you are now moved into a flood zone. By taking the preferred risk policy, you will be able to go into the grandfathering of that, and depending on how that gets phased out, you will pay lower premiums for the same amount of coverage. And it's a very big difference, so it's really a good news. And as I say, it starts at $129, and the max on it, even with a basement, is like $428. So this is your best way, and that, by the way, includes $100,000 on contents. So this is something that is really important. As I said before, 45% of the policies in New England are pre-firm. Nationally, only 20%. Okay. And it is retroactive to June of 2012. Okay, I'm going to turn it over to Joe. He's going to tell you all about the maps.
All right, so who was confused? There's a lot of information, and that's why we're handing out the packets that you all have tonight. Because if you don't understand it all tonight, you can take it home and review it. And we'll get into a little bit more about all of this and reviewing it and how to follow up with us a little later. So part two. Part two is flood maps. That is most likely why most of you are here tonight, because you've heard that there's a lot going on with your flood map. So a little bit of a background. In October 14th of 1977, Marshfield voted in the very first flood insurance rate maps for firms. Every so often, FEMA updates these maps. I believe the last update before this one was 2003, and so now we're looking at it. They actually updated the maps last year, but this year is the big update that they have done. So there are several key issues when talking about flood maps. How do I read these maps? Am I in a new or changed flood zone? If I am added or changed, what does this mean? What can I do about all of this? Flood zones. If you are in a B or A zone, as mentioned before, you are in the SFHA, Special Flood Hazard Area. And on the maps on the back of the room, by the way, we do have all the maps on the back of the room tonight that you guys can look at, either if you looked at them already or after we're done. The maps we have a blue colored area and orange colored areas. The orange areas on those maps refer to increased or added flood zone areas. And the blue shaded areas, which cover all the orange, also, the orange and the blue are in the same areas. The blue shaded area is the SFHA. So when you're looking at those maps, the blue shaded area is the SFHA. More on that in a little bit. So these zones, you must have flood insurance if you have a federally backed mortgage. As explained earlier, most mortgages, how do I know if I have a federally backed mortgage? Well, most mortgages are federally backed, just like flood insurance policies mostly are federally backed as well. V-zone. Now, on the back of the first sheet is an explanation of zones. These can get a little tricky because they do have a bunch of zones, but we're going to go over the basics tonight. You will all be experts in zones by the end. V-zone means velocity, meaning that you see wave action. If you look at the maps, you'll notice most V zones, in fact all of them, are right on the ocean or right on bodies of water. VE zone. The E stands for elevation. There is always an elevation given after the E, so it'll be VE elevation, then something. The elevation refers to the base flood elevation, or BFE. A zone. A simply means you are one step back from V. AE zone. The E stands for, again, for elevation. There's always a number after the E. AO. There's a lot of people with AO zones. The O simply means that water can rise, an undetermined amount of water can rise as high as 3 feet on any given property. There are several other A's. There are other A zones, but these are the basics. Most of you will be categorized in an A, AE, or AO. X zone. X simply means you are one step back from A. You are not required to carry flood insurance, and the blue shaded area on those maps do not cover X zones. It will simply say X zone in X zone areas. However, 25% of flooding damage happens in X zones. There used to be C and B zones. Some of you will say, well, I'm a C and I'm a B. Those zones have been eliminated. You've either been moved to an X or into the SFHA. So here's some diagrams to help everyone out. We talk a lot about several things in this presentation. Base flood elevation, finished first floor, ground elevation, and zones. So here's an example. You've got a building. That building in the top left corner is at an AE16. It's got a basement. The basement is considered your finished first floor, with a base flood elevation running across that at 16. So you can see how far under the BFE the basement is. So the base flood elevation is 16, therefore AE16 is referring to that base flood elevation. And in this example, the ground elevation is 9. Here's a house without a basement in the same zone, AE16. The first floor is still underneath the BFE, base flood elevation, which is 16. However, there is no basement. This house would not be assessed as much as a basement house. Now here's a raised house. In the same zone, AE16, the finished first floor is actually above the base flood elevation. Your policy would be dramatically lower. You're still in the SFHA, the Special Flood Hazard Area, but your finished first floor is above the BFE. It's important to note that in an A zone, your finished first floor is actually the floor you stand on. In a B zone, the finished first floor is top of piling. So there is a difference, and in some structures that could be up to a foot or more. So how do I read this map? The blue shaded area cover V and A zones, the SFHA. Whether you are in a VE or AE zone, again the E stands for elevation and the number after that refers to that elevation, so AE16. The number refers to the base flood elevation. So for example, in the example we had earlier, the AE 16 means your base flood elevation is 16. So the bottom line is, and this is explained in the packet that you all have in the acronym BFE, the base flood elevation is the 1% chance a year water could reach that height. So here's a map. Here's a great example. Unfortunately, this is one of the hardest hit areas in the new maps. We have here Chandler Drive, what's the other one here? Anderson Drive, and that area of town right across from the police station. You'll notice there's a lot of orange. That's because almost this entire area has just about been included in the SFHA. So here's the zone right there. You see it's a little hard to read, but when you can see on the top it says Zone AE. Underneath that, you can't read it, but it says 16. So the elevation is given in smaller numbers underneath. The orange area, this is an area included in the blue shaded area. You can see the dots of the blue on top of the orange. Also means an increase or addition to the SFHA. The zone that arrow is pointing to is not shaded, it's not labeled, it's one of two. It's either not zones, and FEMA considers every piece of land a flood zone. However, non-zoned lands without an X mean you're in a D zone or an undetermined floodplain. So that's a little bit beyond what we want to talk about tonight. So that's why this area is not labeled. The bottom line is those properties are not in the flood zone. Have I been added in a change, or have I been added into a change or a change in the flood zone? Check the maps. They're all in the back of the room tonight. We also have a list in the back, maps online at both our website and the town website. They're also available in Town Hall, and there's many professionals at Town Hall that will be able to assist you in determining the changes happening to your property. Maps are in the back of the room, and also refer to our list of streets of concern. Now let me just explain this for one moment. Attached to the bottom right-hand corner of every map is a list of streets. That list is also found in the back of the room. The streets listed on our list of streets of concern it's either entire roads or pockets of road areas with changes or increases or additions in the flood zone. If you find your street on this list, look at these maps. Chances are there is a change somewhere on your road. Your property may be involved. If you are not sure if you have been added, check with the town hall. Maps are at the town planner's office. So what does it mean if I have been added or changed? Before Biggert-Waters, the part that we just discussed with Doris, if you have been added to the SFHA, which is the V or A zone, or changed into part of the SFHA, you would be grandfathered before Biggert-Waters. However, under Biggert-Waters, as explained earlier, this is going to change. Bottom line, and I don't know what the T's are not showing in this nice graphic I have. Bottom line is you will pay the insurance premium for the zone you are in immediately or over the next 5 years. What that means is whether it be a grandfathered or pre-firm structure, those are the 5-year timelines. If you are in an X zone and you're simply zoned in to a new flood zone, you will pay immediately. Property types of most concern. A lot of people may be wondering, well, is my property one of these? You're a VRA property with a basement. It may be that you had a basement already, or you were in an X zone, they allowed a basement to be built, and you were now zoned into a V or an A zone. Why? Because in the case of a basement, as mentioned in graphic 1A, and that's referring back to the very first graphic I showed, the basement is considered your finished first floor, and your premiums will be high. Example time. All right. So you own a house with a basement in an X zone, meaning you do not pay flood insurance, or you don't have to. We're moved into an A zone. The base flood elevation in the A zone is AE16. And I'm using AE16 in all these examples because that seems to be the new common higher zone in these maps. Your finished first floor in your basement is your basement, so your elevation is at 8. You are below BFE, in this case 16, and will pay a very high premium. You're in an example time again. You're in an A zone, AE8, this is a little lower zone, and move into an AE16. Now I want you to know that this example is from a real life situation. Your house is elevated to an elevation of 18. You are above BFE. You will be required to carry flood insurance, but at a good premium. You're above the base flood elevation. In some cases, though, this is what I was talking about by this is actually happening to someone that's working with us. Raised houses are AE12, for example, and the new maps are AE16. Again, in the old before Biggert-Waters, that would be a grandfathered situation. However, that house must have flood insurance, most likely at a higher premium, even though it's elevated. As soon as that base flood elevation goes above your finished first floor, your premium goes up. So what can I do? Most of you are wondering, what am I going to do about all this? Well, I have some good news. Again, yes. Oh, here we go. Again, if you are being moved into the SFHA from an X or no zone, get flood insurance now. Get a preferred risk policy, a PRP. And this is where we'll talk a little bit more about this. The PRP handout is the very last one in your packet. Preferred risk policy. Refer to the preferred risk policy handout. Rate increases 20% a year until actuarial costs. Now, we talked about actuarial earlier, just for a review. Actuarial means the actual rate of that zone, not any type of grandfathered or subsidized rate. So why do this now? Why if it increases 20% a year, why am I going to do this? This is what some people ask. Why am I going to do this if it just buys me time? Because it does. It buys you time to make policy adjustments. And what we mean by that is make room for to accept the increase in the cost of the policy. No, flood insurance covers structures, not land, and that is important. And we'll talk about that in a little bit. So who is eligible? Your current location is either an X zone or you're not in a zone, and not in the SFHA. So you cannot get one of these if you are in a V and an A zone. Deadline to get a PRP is 13 months after firms are voted in. Now let me explain this a little bit because I've had some back and forth with NFIP about this part of the presentation. The deadline, they're considering the deadline to get a PRP 13 months after these maps are accepted by the town, which is June of next year. And the reason being is because there are some parts of Biggert-Waters that are either going to possibly be changed or will not go into effect until that timeline. After talking to NFIP again about this today, the bottom line is this: get one of these policies as soon as possible. Do not wait around for that 13 months after the maps are accepted. So here's an example. This is actually the rate chart for PRPs. Now this is a little hard to read, and for everyone that's struggling to read this, I just want you to know this PowerPoint will be on our website by the end of the day tomorrow. What that is saying in the top left-hand corner, for coverage, $20,000, it's $174 with a basement a year in coverage. So what that's saying is that's where you start. You start at $174, and your rate would increase 20% a year off of that cost until you pay the rate of that zone you are in. However, at $174, and say the rate of your zone, just for example, is $5,000, that gives you an awful lot of time at 20% a year to get to actuarial cost. That is why PRPs are critical. So what else can I do? We are in a map appeal period. How many here have heard about this 90-day period that we're in? Okay. So as an explanation for everyone here, the 90-day period is a period that started July of 17th and ends October 16th. This period allows us, either as individuals or the community, and it's outlined in a letter that the town got, how to do either appeal. We are allowed to appeal changes in the maps. To appeal the maps, we must prove FEMA-made errors in these areas. Quality of the topography, in the next word, bathymetry, is simply the depth of the ocean or depth of water used in the models. And the models are what generated the maps. All of the stuff listed here is what generated the maps. Validation of the models using historical flood events. Selection of flood events modeled. How those events are parametered in the models, and methods by which water levels from individual simulations are combined statistically. So this is listed from easiest way to get to an appeal to the hardest way to get an appeal. And I can tell you that I requested from FEMA the documents involved in creating those maps. And if I handed one document out to everyone in this room, we would be here until Saturday reading and understanding them. That's how large the file is to prove scientifically that the modeling they used was wrong, which are the few last bullet points here. So, and overland wave hazard modeling, which is their computer modeling they use. So, firm map appeals. Let's just go over it one more time. Tells FEMA they made errors in making the maps and are scientific based. We have a lot of people saying, my property's never flooded, I will never see flooding. But they're zoning me now into an AE 16. We'll use that example again. Can I just write a letter to FEMA telling them I've never flooded? No, they won't consider it. Elevation certificates and site plans may prove a map error. Going back here, the very first area of error that we could find, quality of the topography and bathymetry used in the models. So if you're talking about site plans and elevation certificates, that's going to give you an idea of elevation to possibly prove a map error. Just stating the area has not flooded is not enough and is not scientific. Appeals must be submitted as one, not individually. So this is where the two arms of these appeals happen. For example, if the library is now considered an A zone, if the town of Marshfield decided to appeal the maps, individual appeals from each one of you would go into the same appeal as the town of Marshfield. If the town does not decide to appeal the maps, individually, you would need to collect all the appeals into one document or one package and submit that off to FEMA. Now, and we'll talk about this in a little bit. Remember, there are only 90-day appeal. We are in a 90-day appeal period, and that ends October 16th. So we're already about a month into this. So what can I do? Your community can be part of CRS, Community Rating System. CRS, there's some talk right now about CRS. What is CRS? Well, it's important to all of you because it applies to everyone that has a flood insurance policy. CRS is a rating system from 10 being the worst to 1 being the absolute best. CRS rating of Marshfield right now is an 8, which gives every single person with a flood insurance policy a 10% discount on their premium. If you don't know whether you're getting it or not right now, you will have to look on your policy. It will say CRS discount. If you don't have that on your flood insurance policy, ask your insurer because they will have to give you the CRS discount. Doris, we talked earlier, she was on the Marshfield Coastal Advisory Committee in the 90s, and we were at a 20% discount at that time. Now CRS, to give you a little bit better of an idea what CRS is, because we've kind of glazed over that really quickly, and I don't want to get too in-depth in it. It's a system implemented by NFIP, and the town has to do a certain amount of recording of different things, submit it once every 5 years for a review, and they give us a discount. That is the short of the long story of CRS.
But the
paperwork's about yay high.
I have the document, the book that you need to fill out or read in order for a community to get a CRS discount, and it is 800 double-side pages. But we are complying at an 8. What if map appeals don't work? What if we get to the end of those 90 days and FEMA says, you know what, none of these appeals are good. They throw them all out. And maybe a couple get passed, but they throw them all out. What do? LOMAs are loam Cs. For the purpose of this presentation, we're going to use them both as one. There are differences. We'll talk about that in a minute. Letter of Map Amendment, that's LOM, that's LOMA, LOMA. That is another acronym. And again, we're going to use them both as one, even though they're different, but for right now they're the same. So LOMAs, they're based on elevations. Thus, elevation certificates and site plans are valid. Individuals can apply. Easiest route for an individual to get out of a flood zone or the floodplain. LOMA applications are done by a surveyor. LOMCs are done by homeowner online. What is the difference between a firm map appeal and a LOMA? A firm map appeal tells FEMA they made an error or errors in making the maps, and a successful appeal would change zone ratings or elevations. LOMAs tell your bank your flood zone is wrong. Would not change the firm zone rating, so it wouldn't change the A, V, or X zone, but it would prove your elevation is different than what those maps are saying. Am I a candidate for a LOMA? A lot of people have asked me this. You know, can I get a LOMA? Am I applicant for my, you know, can I get one? Will it work? Well, let's go over that. LOMA candidates are, because the flood line must go through a structure for someone to be in a flood zone. Remember, flood insurance covers structures, not properties. Because the flood line must go through a structure for someone to be in a flood zone, properties that are on or near a zone line and are considered in a flood zone on paper are applicants for a LOMA. Properties that, for example, have crawl space but the elevation certificate reads basement are applicants for a LOMA. We are encouraging entire neighborhoods to do LOMAs at one time, and we will discuss this at the end. The bottom line, if your house was built before 1977, you are a grandfathered property, and you are in a V or A zone, your flood policy will cost you more. If you are on our streets of concern list, check the maps to identify your location. There are things we can attempt to do to fix the errors and your rating, map appeals, and LOMAs. If you are moved into a V or A zone, get the preferred rate policy. So if you were in an X or not in a flood zone, and you were moved into a V or A zone, get the preferred risk policy, risk or rate. I use them both. Ask your insurer. Bottom line, we must vote these maps in at annual town meeting in the spring of 2014. A lot of people are sitting here going, these maps really hurt me. They are changing my zone, my insurance rates are going up, I have a basement, I'm really, really being hurt by these maps. If we do not vote these maps in at the annual town meeting, I believe it is annual town meeting, I called town hall today to double check. They believe it is annual town meeting. We are going to confirm that for you. But you'll all know when it happens because it will be quite the presentation on flood maps. If we do not vote these maps in at town meeting, FEMA will pull all of its disaster assistance and federally backed flood insurance policies out of the town. So we have to vote these maps in. We may not like what these maps do, but we have to vote them in. This is not something that the state or town is telling us. This is what the federal government is telling us. So there is a timeline to all of this. This is one of the most important parts. There is a timeline to all of this. Biggert-Waters Phase 1.
bullshit.
January 1st, it's already happened. And it retroactively goes back to 2012. If you didn't understand it when we went over it the first time, what this is saying is, if one of those 5 things we talked about earlier happens, your house is sold, policy lapses, substantial completion is done on the house, you, all the way back to June of last year, these changes will happen to you. The 90-day appeal period is July 17th to October 16th of this year. We are in it right now. Implementation of Biggert-Waters Phase 2 is October 1st, 2013. Firm maps get voted in, spring annual town meeting. New firm maps become active, and all PRP policies need to be purchased before June 2014. Again, while talking to NFIP, they're now saying we have about a year-long time after that date to get PRP policies. We, not only is NFIP recommending, but we are recommending to get these PRPs before these maps are activated in June of next year. There is no deadline to get a LOMA. The 90 days does not apply to LOMA applications. There is, okay, so what is next? Well, I want to make one note. There were about 30 LOMAs that were applied for and active under the old maps. And in fact, that list is available at the Town of Marshfield website. We'll put a link on our website also to get to there. And the document itself outlines the property names of LOMAs. Now, a question I had, and there's not many people in town in this situation, but you should be aware that this is happening. If your LOMA was under the old maps, if 2003 maps, you applied for a LOMA, all LOMAs are reviewed every time there is an update to the maps. So this time around, this year or next year, when the maps are, actually this year when the maps are out now, not active yet, but they're out, all LOMAs are being reviewed. There are 5, or actually no, there's only about, there's about between 5 and 10, and you'll see this when you go to the website. Between 5 and 10 of those 30 to 50 policy LOMAs are still valid under the new maps. A lot of LOMAs have actually been suspended, they call it, because the new maps raise the elevation higher than what that LOMA was for under the old maps. So just because you had a LOMA doesn't mean you still do. And that is available online on the town's website. So what's next? Let's talk about what's next. More outreaches. I'm sure people really appreciated coming here tonight, and if you were really confused, at least you have the documents in your hand to try to start to grasp what's going on. We at the Marshfield Citizens Coastal Coalition are working on 2 more of these outreaches. Time and date aren't known yet. We would like to have it. We would like to see a crowd just like this, though, because the more people we reach out to, the better. Representative Cantwell is working on doing an outreach, and at the end of this, we'll let him speak for a moment. Where he's working on an outreach with our Congressman, Representative Keating, to talk to him about what's going on with the changes in Biggert-Waters. And FEMA will eventually do a sanctioned outreach. Now the problem with FEMA is because of the sequester, they are limited to 1 to 2 outreaches for every county. So the chances are that outreach will be between Marshfield and Scituate, as I've heard people talking. But that will happen. Tell your neighbors and spread the word. The best thing we can do right now is facilitate, and that's what we're here for. We are here as a citizens group to facilitate the information to everyone in this room and beyond. If we could reach every single person affected, that would be our goal, but we just can't do that. Everyone here can start that process by talking to people that you know or that directly you're involved with, whether it be for your business or whatever you do. I know we have real estate agents here, we have bankers, and we have a bunch of people that this affects directly. So spread the word. There will be a joint town and FEMA meetings going forward as well. And this is how to stay in touch with us. It's on the documents you all have. And